Ladies and gents, I think this is it. I think this is the beginning of a much bigger sell-off. So we're going to go over why I think that, and make sure you stay with me because we're going to go over exactly how much money someone could make if the market really does crash like 20% or more. I pointed this out in my last video. We had this bit of what looked like a falling wedge pattern on the overall market, and this was the breakout target. We got pretty dang close, but we could not get above this previous resistance line, and then the sell-off continued. Because of this, we're now in negative gamma territory where it's where market dealers sell into selling and rather than buying into buying. If we take a look at what's going on the daily time frame, we've actually come all the way down. We're slightly below the 50 simple moving average. We're at the lower end of the Bollinger Band, at least on the daily, but we're also resting on this very strong support level on the daily of the Ichimoku cloud. If we zoom out a little bit to the weekly though, you can see that there's much further that could actually fall based on what the RSI is showing. So while we're already here, I want to show you what this pattern target is. We went over this in my very first video, but I want to show it again. A measured move from here to here, drag it out to here. On SPY, this is now targeting roughly about 467. Again, pattern targets can overshoot, and if this overshoots and gets below this weekly support level here, we could see this come down much, much further. And if we take a look at the futures, we're targeting around like 4,700, give or take. And the main takeaway is that whether or not we are looking at the futures, SPY, or SPX, we are now below this main support line of this rising wedge pattern that has not been broken yet in over a year. And so even SPX is targeting around 4,700. The irony is I was going to make a video about what we were expecting, how many more weeks before we got to the apex of this pattern, and we're already there. We had what I believe was a false breakout here, and now we're getting the true breakdown. So what does this all mean and how can we make money on it? Right now, the market, SPY, is sitting around 540. So if we're looking at the 540 strike puts, and let's say we want to go all the way to the end of the year, we want to give ourselves time to be right on this thesis, what could we expect? So we were targeting around that, like 470 area. If we only got down to there, you could pay about $1,700 and you could pull almost $5,000 out of the market. But what if it kept going? What if we got this 50% market crash that some people are calling for? What would that look like? If we got a market crash of 50% from this point right now, and you had these puts, you'd pay about $1,700 and you'd be pulling out about $25,000 per contract. And of course, if the implied volatility were to double or let's say even triple during this time, you're going to be in profit even faster. You may not be in the money, quote unquote, but you're going to be making money even faster on the way down. So there's a lot of stuff going on that could be leading to this market sell-off, but the kind of the tipping point really does seem to have been Tesla and Google's earnings, which they came in okay. Tesla, not so much, but we had bad forward guidance, and Nobody Special Finance did a video on this today that went in detail over all of those earnings. So I'm going to link that above. It was an amazing video going over everything that is just so crucial to what tipped this whole thing forward. So coming out tomorrow before the bell at 8:30, we've got durable goods month over month. We got GDP. It's going to be very important, and initial jobless claims. And then we've got the Fed's preferred inflation gauge coming out at 8:30 in the morning before the bell on Friday. If that comes in lower than expected, it'll give the Fed more fuel to cut rates soon. And the former New York Federal Reserve President Bill Dudley is even calling for the Fed to cut next week. I think it's obvious they're seeing significant slack in the labor market. The market's already pricing in an almost 100% chance of a rate cut in September, but if we see even one sooner than that, that's a really bad sign. And there's only about a 1% doubt in my mind that we're about to live through one of the worst market crashes in a recession or depression that the world has ever seen. Some people are trying to say that this is just seasonal weakness, but I've got to disagree. We've got so many recessionary indicators firing off at the same time right now. The SOM rule is very close to being triggered. The yield curve has been inverted like the longest in history. And then you've got the Buffett indicators flashing warning signs. So I want to continue on to some other patterns that are going on. Let's start with the ADD and how it's going to affect the markets. We have what appears to be a falling wedge pattern going on here. We can see today we actually broke below this support line on the overall market, but we're close to this negative 2,000 line, which is a lot of times where we bounce from. Sometimes you get a false breakdown before a breakout, although I'll admit this does not look very bullish even on the RSI. So if this breaks out after hitting like maybe this negative 2,000 line, we could potentially see like a V-shaped recovery or possibly like a dead cat bounce on the market. But I think we're actually going to continue heading lower. On the Dixie, before we went over this falling wedge pattern, remember how patterns can sometimes morph? Now it's looking like more of like an inverted head and shoulders pattern. And if that breaks out, you can see the target is still right around that 105 area. And if we zoom out to the daily on the Dixie, we still have this big falling wedge pattern whose pattern target is all the way up here around 116. But if that doesn't break out as intended, we also have this newer, smaller symmetrical triangle pattern. We could potentially have a false breakdown here because we're still above this main support line. This is targeting, if we go up here from this measured move, targeting around 110 just from the symmetrical triangle. If we do actually break below this main support though, this would then be targeting around 99. And as many of you know, if you're watching this channel, if we have strength in the dollar, a lot of times that makes the market sell off. If we have a sell-off in the dollar, sometimes, a lot of times that'll make the market rally. Sometimes you can actually see both go hand in hand, where you've got the dollar selling off and the market selling off. And what that could be indicative of is that foreign investors are fleeing the market. And when we take a quick look at the VIX on the 4-hour time frame, we still see that we had this breakout pattern. We had the breakout target, which we actually have exceeded. On the weekly time frame, the RSI is pretty overbought, but on the monthly, it's got plenty of room to run.